Imagine waking up every month knowing you have $3,000 hitting your account, whether you're working or not. That's the power of dividend income. In today's video, I'm breaking down the fastest and smartest way to live off dividends and earn $3,000 a month, step by step, even if you're a complete beginner. Let's get into it. First, what are dividends? When you invest in certain stocks, especially from strong, stable companies, they pay you a portion of their profits, usually quarterly. This is called a dividend. For example, if you own 100 shares of a company that pays $1 per share per year, you'll get $100 annually just for holding the stock. Now multiply that across multiple companies and higher investments. That's how we hit $3,000 a month. How much you need to earn $3,000 a month? Let's do the math. To earn $3,000 a month, or $36,000 a year, from dividends, you need to invest in stocks that pay reliable yields. If you invest in stocks with an average 4% dividend yield, here's what it looks like. $36,000 per 0.4, $900,000 invested. Sounds like a lot, right? But stick with me, I'll show you how to get there faster. Choose higher yield dividend stocks at 6%. $36,000 with 0.6 equals $600 needed. That's $300,000 less. Strategy matters. Step 1. Open a dividend-friendly brokerage account. Open an account with a low-fee brokerage like Fidelity, Vanguard, or M1 Finance. You want one that supports DRIP, dividend reinvestment plans. Step 2. Build a high-yield, reliable portfolio. Focus on dividend aristocrats, companies that have raised dividends for 25-plus years, and REITs, real estate investment trusts, for higher yields. Example starter portfolio. Johnson & Johnson, 2.9%. Procter & Gamble, P. J. Morgan Chase, 3.4%. O, 5.5%. Vanguard High Dividend EDM, 3%. Schwab U.S. Dividend Equity ETF, S%. This gives you a blended yield around 3.5% to 4.5% with strong stability. Step 3. Reinvest everything until you hit critical mass. Here's the power move. Reinvest every dividend. Use DRIP so your dividends automatically buy more shares, which earn more dividends. That's compounding. Example. Start with $50,000 invested at 6% yield. That's $3,000 a year. Reinvested, you double that in about 10 years without adding a single dollar. But we're not stopping there. Step 4. Max out contributions. Accelerate growth by investing regularly. Max out a Roth IRA, $7,000 a year if over 50, tax-free growth. Add to a taxable brokerage too. Even $500 a month compounds powerfully over time. Use side income, tax refunds, bonuses, whatever you can. The faster you grow the base, the sooner you hit $600K to $900K invested. Step 5. Use covered call ETFs or monthly dividend stocks. To boost income short-term, consider JEPI or covered call ETFs with 7-12% yields. Monthly dividend stocks like Realty Income or Main Street Capital, Maine. Just be cautious. Higher yield is higher risk, so use these to supplement, not replace your core. If you invest $1,500 a month into a 6% yield portfolio, in 10 years, you'll have $240,000 invested. Reinvested, you'll be earning $14,000 per year. Keep going, and in 20 years, you'll reach $600K plus, earning your $3,000 month goal. Want it faster? Increase contributions. Use higher yield ETFs. Cut expenses and reinvest savings. Combine this with other passive income like digital products or rentals. You don't need to be rich to build a dividend machine. You need a plan, consistency, and time. The sooner you start, the sooner you stop trading time for money. Hit like if you found this helpful, subscribe for more passive income strategies, and let me know in the comments. What's your monthly dividend goal? Let's build financial freedom together.